Right now, XRP looks calm on the surface, almost boring to many traders. The price is moving slowly, volatility feels muted, and the social media attention has shifted elsewhere. But according to well-known crypto analyst Egrag Crypto, this calm is not a sign of weakness. Instead, it may be one of the most dangerously misunderstood phases in XRP's market cycle. Historically, moments like these have often appeared before major expansions, not before crashes. While short-term traders focus on daily fluctuations, analysts who study market structures, cycles, and wave behavior are seeing something very different. The XRP chart, according to Egrag Crypto, is not breaking down. It is repeating history. So in this video, we are going to break down why Egrag Crypto believes XRP is structurally setting up for a move toward the $15 to $22 range, and why many people are ignoring it, and what this means for XRP's market impact going forward. So, what does XRP's current price structure reveal? XRP's recent price action shows a pattern of controlled consolidation, not chaotic selling. Each pullback has respected rising dynamic support, particularly around the 21-period exponential moving average on higher time frames. This detail is critical because it signals that price is cooling off, not being distributed by large holders. Momentum during pullbacks has been declining rather than accelerating, which suggests selling pressure is weakening. Buyers are stepping in earlier with each correction, creating higher lows. This is a classic sign of bullish market structure quietly strengthening beneath the surface. So, the market impact perspective here is this type of structure indicates institutional patience rather than retail panic. When price holds above key moving averages during long consolidations, it often sets the stage for strong continuation moves once momentum returns. So, why does this consolidation look familiar? Egrag Crypto emphasizes that this is not a new pattern for XRP. And in previous cycles, XRP spent long periods consolidating above critical support levels, frustrating traders and killing hype. However, once those consolidations resolve, the result was a violent upside expansion. The similarity between past cycles and the current structure is striking. The chart visually reinforces that XRP often pauses before accelerating, not before collapsing. This repetition strengthens the argument that what we are seeing now is preparation, not stagnation. Market-wise, repetitive behavior matters. When an asset consistently follows the same structural rhythm across cycles, it builds statistical credibility. Traders who recognize this pattern early often gain an advantage over those reacting emotionally. So, how does Elliott Wave theory support a bullish XRP outlook? From an Elliott Wave perspective, XRP appears to have already completed its initial impulsive phase, which includes Wave 1, 2, and 3. After that strong impulse, the market naturally transitions into Wave 4, a corrective phase designed to reset momentum rather than destroy its structure. Importantly, this Wave 4 correction has remained technically healthy. It has not broken macro support, nor it has invalidated the broader wave count. That tells us the impulse sequence is still intact. Elliott Wave theory identifies Wave 5 as the stage where participation expands, momentum increases, and public attention returns. If XRP holds its structural foundation, the technical framework continues to favor another impulsive move higher rather than a breakdown. This suggests a potential market impact where XRP could move rapidly once Wave 5 begins, catching late participants off guard. So, why are analysts targeting the $15 to $22 price zone? The $15 to $22 target range is not based on hype or speculation. According to Egrag Crypto, this zone is where multiple technical tools converge. These include Fibonacci extensions, measured move projections, and cycle symmetry. When different mathematical models point to the same region, analysts refer to this as structural confluence. This significantly increases the credibility of the target range because it reflects market geometry, not narrative-driven optimism. Historically, XRP has shown a tendency for extended fifth wave expansions after long consolidation periods. If that behavior repeats, the projected zone becomes not just possible, but technically reasonable. From a market impact standpoint, a move into this range would likely shift XRP from a forgotten asset to a dominant market leader, triggering renewed liquidity, volume, and mainstream attention. So, what levels would invalidate this bullish scenario? Despite the optimism, these theses remain disciplined and conditional. A decisive breakdown below macro structural support would invalidate the current Elliott Wave count and neutralize the bullish outlook. At present, however, price continues to respect structure. Volatility remains contained and buyers defend key levels consistently. This balance of control suggests accumulation rather than distribution. Clearly defined invalidations Clearly defined invalidation levels are important because they allow traders to manage risk logically rather than emotionally. Markets reward those who understand structure, not those who chase momentum blindly. And finally, my own personal opinion about this is that this XRP setup represents one of the most misunderstood moments in the market. When price feels boring, attention fades, and narratives go quiet, structure often becomes the loudest signal. Egrag Crypto's analysis does not rely on hope, it relies on historical repetition and technical integrity. That does not guarantee a $20 XRP, but it strongly suggests that ignoring structure has a cost. If Wave 5 unfolds as projected, many traders may only notice XRP once price has already traveled far from its current range. Markets rarely reward emotional reactions. They reward patience, structure, and timing. And right now, XRP appears to be quietly setting the stage. And this finally ends our video. Thank you very much for watching and see you on the next one.